Hi, and welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com, and it's Wednesday, December 3rd. Well, today's market got my attention, and the reason being was, we walked in this morning, and there was bad news pretty much all around the place. RIM Corporation painted a very bleak outlook for their future, and they painted a bleak picture of the economy. Plus, there was some other bad economic numbers running around that weren't good. So, as usual, the market gaps down 150 points, but then stops and turns around, and through the course of the day, with a lot of ups and downs and backs and forths, manages to close up 175 points and on the high of the day. Now, that's the second day in a row that the market has closed on the high of the day. What else is important about that is that for the first time, when bad news hit the market was able to shrug it off and close up on the day. And that's what got my attention. I'm sure I'm not the only technician and the only trader, the field traders around who are going to talk about this tonight. It was pretty obvious, bad news, and the market shrugged it off. These are the kind of signs that a lot of guys have been waiting for. So I think we need to at least explore the possibility that we may be in the beginnings of either a short-term to an intermediate-term rally. Yes, I know we're still in this defined downtrend, and if it wasn't for that downtrend, if we were in any other kind of pattern but the pattern we're in, I would be pounding the table about how important today was. But I'm still a little cautious only because of this downtrend, but I still think we need to explore the possibility of an intermediate-term rally. So we'll do that in our final segment when we look at all the averages. We will go through some scenarios as to what if. Because we've got two good, strong technical days back-to-back, and a day that we had bad news that the market shrugged off. So, like I said, it got my attention today. It got my attention to the point where I've even mustered up enough courage to highlight a stock on the buy side. So we'll be looking at that also tonight, and that stock is Rackable, R-A-C-K. Now, a lot of you who've been following me for a while know we've been in and out of that stock a number of times, and most of the time we're pretty successful with it. Well, I'll show it to you tonight, and I think it's got a good chance of rallying. So if you share my view in it, you can join me in the trade. If you don't like my view, well, then you pass on. But without further ado, we're going to go take a look at Rackable, and we're also going to take a look at all the major indexes, and we're going to explore what a intermediate term rally might possibly look like. Okay, be right back. Okay, this is a daily bar chart of Rackable. Symbol's R-A-C-K, as you see here. Okay, this is a call on the long side. I'm looking to buy this stock tomorrow. We're closed at $4.16. So anywhere, underneath yesterday's close, the closer to 4 that you can buy it, the better off you'd be. So hopefully we get a little bit of a pullback in the morning, and you'll be able to get some in around 4. Once again, I don't chase after them. If they run, they wait for them to pull back again. Sell stop would be closed below this level, which is $3.76 right there. Close below that. And my target, got two targets. First is 6 because it's the bottom of this formation, right here. This is our first resistance area that we're going to run into. This whole pattern right here. So it could stop at the bottom of the pattern, which is 6, or it could run up to the top of the pattern, which is $7.30. So, we'll have to see how high it can get. But this is the target area, from 6 to 7.30. Okay, what do I see? Well, once again, I've got this ascending triangle forming, and it's got a good look. It's been formed for 1, 2, 3, 4, 5, 6, 7. It's been forming for 8 days. So to me, it looks pretty solid. We'll at least get a rally back up into the resistance point out of this formation. So let me recap this. This is rackable. This is a call on the long side, and depending on how high into the pattern it gets, we can make either $2 or $3.50 on this trade. Okay, let's go take a look at some of the indexes, and we're going to explore some of the possibilities. Okay, we're looking at the daily bar chart of the Dow Jones Industrial Average. As you see, we've been looking at this defined downtrend for a number of days, and today's action closed, you can see, closed right on the high of the day, and yesterday's closed on the high of the day. But what's really important about today's action is it just shrugged off all that bad news, and that's what caught my attention. But the first thing that has to happen is we've got to get through Wednesday's high, this area right here. That's our first line of resistance. If we can get through that, then this pattern is starting to take on and more of a look of a bottom formation. Now, in technical analysis, in a couple of months, if we look back down at the chart and we say, oh yeah, I should have recognized that bottom. When you look back down at them, yes, you can see them. But when you're living through them and you're trying to make sense of them, it's much more difficult. And that's where we're at right now, okay? So what it could possibly look like would be something like this. Okay? We could continue up, break above this high, Wednesday's high, and attack the old resistance area, which is this. I don't believe we're going to get through that on the first try up. Then I can see us pulling back to this support area here now, once we break through it, and then that should hold, and then maybe a breakout above that resistance area after a test of this support area. So that's a very plausible scenario how this could play out. But the key is going to be getting through Wednesday's high, because the other scenario is a rally to Wednesday's high and a failure, and right back down again. That's still a possibility, although I think today's action changes the odds of that happening. I think this is probably a more likely scenario. Up, back down, test support, and then a go. So we'll see. We're going to go take a look at some of the other averages, but the story's the same in all of them. And if it happens in one, it's going to happen in all of them. But we'll run through some of them. Okay, we're looking at the Russell 2000, and what will happen if we can get through Wednesday's high? This whole downtrend finally will be broken. So played out on this stage, it would look something like this. First, we need this breakthrough on Wednesday's high, a rally back up to this resistance area, a pullback to the support, and then possibly another rally. So that's a very plausible scenario. All right, this is the QQQs. I cannot go through all the indexes. I just don't have enough time on the video. But played out here again, this is all Wednesday's high. Like I said, all these charts look the same. We need to get through Wednesday's high. Now, if we don't get through Wednesday's high, the scenario will be up to the trend line again, and then back down. But like I said, I think today's action changes the odds of that happening. I'll be looking for a rally up to this area. Once we get through that, that's going to be support. A pullback, test it, and then possibly another rally and a final breakout above this. This still is this key area of getting through this, because then we'll have this whole pattern underneath us. And like I said, once we look back at it, it'll be easy to see, but when you're living through it, it's a lot more difficult. Anyway, that's my view of the market. This is TK signing off.